At the end of the day, you are giving profitability away for every person who doesn't belong in that seat and for every role that doesn't want to be there.
Is this making financial sense for you? And it's yes or it's no.
Let's make sure that those employees are holding up their end of the deal and getting to those expectations that you want so that your agency can grow its way out of it.
All right. So I'm so pleased today to be joined by two lovely female insurance financial professionals here. We are proud supporters of Agency CFO. As many of you all know, we don't touch agency financials. We touch your operational excellence. Tied in is needing to know how to run strong financials for profitability, because no agency I know is trying to run a charity, although they may be on accident running a charity. And so having a good, strong financial health leads to so many great things for your agency. So as you're building your strategic plan, if you're looking to perpetuate or sell to private equity, having the strong income statements, P&Ls, all of those things is really important. And these guys do it better than anybody else. Many agencies we know might not be of a size to have a full-time CFO. And that's why Agency CFO was created, was to allow agencies to have opportunities to a fractional CFO so you can have your financial health as well as make it work. So I'm joined here today by Kayla and Shauna from Agency CFO, and we're going to just talk today. What are some hot buttons in the industry? Then we're going to talk a little bit about what are some things that every agency should be looking at in their finances. And then finally, how does a fractional CFO work? Because I think a lot of people maybe have never heard of one or don't know how it would help them. And so all of this is going to dovetail in. If you're looking at your strategic plan and thinking, gosh, I really don't know much about my finances. Maybe the last time you took a finance course was high school or college. This is going to be time to really get this part of the house in order. So why don't we start by some introductions? I'll start with Kayla. Would you like to tell everybody a little bit about your background?
Yeah. Thank you, Juan, for having us. I'm so excited. So I will say, I'm going to start with actually what is an agency CFO very quickly, because you hit the hot button item. Not many people know what it is that we really do or what do we offer. So we're a virtual, fractional, scalable, customizable CFO service. And I know that's a lot of jumbled words. But really what that means is you're getting a CFO who specifically focuses in this space. This is our niche. This is our expertise. We don't do anything else. We just do numbers. And you get it at a fraction of the seat. We meet virtually and we scale with your agency, whether you're at 1 million, you're at 10 million, 20 million. We're really here to grow with you. So I'm going to start with that. And two, I'm Kayla. I've been here at Agency CFO, I believe 6 years. This is my 10 years in insurance this year, actually. It's been very exciting to sit in different parts of the seats. I have been in every seat here at Agency CFO. I have worked in the agency, whether it's captive and independent. So I've really seen this industry from every facet you can probably see it. I never thought I'd be in an accounting seat, but I've been a CFO, I believe 2 years now. I'm coming up on 2 years, and it's one of the most fun. I know it's one of the most fun jobs in this industry. We have fun with our clients, and everyone's shocked to hear that numbers can be fun, but growth is fun, and
making money is fun.
It is. So when you know your numbers and you know where you're headed, it is fun because you have something to believe in and you have something to work towards. And at the end of the day, we're here to deliver value. So I love this job and I love being a CFO. And I hope that, that enthusiasm always transfers to you in your business as we work together.
All right, Shauna, would you like to say hello?
I will. So I'm Shauna. I joined Agency CFO just at the beginning of 2024. So I'm in about 9 months. I am in the insurance industry about 5 years now. So about half of what Kayla's been in it. We're the same age. So that's pretty crazy to me that Kayla's been in it that much longer. So I worked with an independent insurance agency for the 4 years previous to coming here as their controller. So that's been my background, is always in the numbers. Definitely something that I'm excited to join the Agency CFO team as is. Kayla's so amazing at all of the strategic side. That's the value that we bring, is you're not just getting reports and numbers told to you that you can, get anywhere. You're getting to that strategic side as well, and that counseling as well. So that's definitely something that we offer, and definitely excited to dive more into that side of the role rather than just the numbers, even though, yes, they can be boring. And when you see 20, 25% profit at the end of the day, that's pretty cool to see.
Absolutely. And I always like to tell our agencies that we have a lot of joint agencies that we work on together, that you can choose what to do with your profit, right? Like, so some people feel like, oh, well, I need to reinvest it to grow. Great. Once you have it, you can. And you could loan it to the agency and make interest on it if you wanted to. But I think so many agencies think about the profit last and not first. And those are just good guidelines, whether it's an employee coming to you saying, I need to make more money, or whether it's making an investment in something, or are we overpaying or underpaying our team? Those are the kinds of questions that these guys look at day in and day out. So I know Kayla had some great points as we were getting ready. Like, what are the hot button items that you're seeing out there from a financial perspective?
So I'm going to start with, there are 5 key, finance in general can get very complicated. And when you start hearing numbers or words like EBITDA and profit and cash flow and exactly all these terms thrown around, it can be very overwhelming, especially if, you joined insurance just to sell something, did really well and wanted to, really gain the benefit of being an agency owner. So for everyone that does not have financial background, and big secret, and I will tell it, is that most agency owners don't have that financial background. So don't feel left out. The top 5 items, though, it's so easy. Fundamentally, if you are watching revenue and fee and commission, you're watching your profitability. And I will say there are multiple variations of profitability. If you're a best practice agency, you'll definitely know how we measure that. There's cash, there's new business. So written production, what are you bringing in the door that year, not earned? And then cancels. What's leaving? What's happening to your book of business? And if you can monitor those 5 things, you are going to be better off than, I'll say, 80% of your agencies out there. So when it starts with that, you have a very clear picture of what leads to profitability. So there are multiple ways. We look at operating profit, which is your true fee and commission dollars, less your expenses, and that's how we get to your operating. What do you need to run your agency? And when you can really fine tune that, run that at best practice, I think you can narrow down what it is that's stopping you from earning that profit, right? Compensation is one of the biggest hot button items this year. I will say people in general. I don't think I have talked about people more last year.
Finding them, paying them, finding good ones. Yeah.
Exactly. It all costs money at the end of the day. And when you're seeing that rotating door, or you're seeing, the craziest scenarios happening. At one point, I thought we were going to have to change our name to CPO instead of CFO. But at the end of the day, people are your biggest asset on top of your book of business. So it's also your largest expense. And the better that you can manage that and really understand, are we paying producers too much money? Is it our service book? Are we unprofitable in our book of business? And, more often than not, the answer is probably yes. You probably, felt what was right at the market. You gave them that rate. But what people don't realize is you can get strategic about every single one of those items. And I know compensation is tough because once it's set, it's there. It's really hard to back down from, to change, adapt. But part of strategic planning is planning for those items. Compensation is obviously super hot right now, but I will also say, really knowing where your business is going to come from is one of the other hot button items we've talked about. So we've talked about kind of cost per lead and what that looks like. And,
Right. You can be reading a lot, but not be profitable.
Exactly.
And I think that's a big target. And it's okay if you predict, hey, I'm going to be profitable in 2.5 years.
Absolutely.
But I would be doing everything in my power to get your closing ratio as high as humanly possible to accelerate that. And I think that's so cool what you're saying, right? Like there's all these different levers at the end of the day. So maybe if a number's not looking good, right? Like, hey, okay, well, I would be looking at the numbers and saying, how could I get this to be more profitable? Well, I could close more. I could reject more of the leads coming in. Or I could say, this is one, I know you and Don and Shauna will love too. There's free leads in your book of business. They just have to be sold on. So you may have to pick up the phone versus the phone ringing at you. And yes, that's a different strategy. But if you're not profitable, you have to start looking at what you have in front of you too.
Absolutely. And you have to consider, not only are you paying potentially for that lead, let's say you're paying from a referral source and paying them a percentage of it. You could be getting leads, Trusted Choice and some of those lead sources, you're paying, per dollar for that lead. There's a price point. But the other part of that is you also have to give a percentage of that to your producer, to your service team. So it all trickles back to that compensation plan. And they're so married. And if you don't get that right, you really lose not only on the lead itself, but you set yourself up for a very unprofitable book. And I will tell you the secret is it generally means bad retention. So not only are you paying a lot to get it, you're also losing it before you can even become profitable on it. So at
Well,
that
if we can
point,
stop on that just real quick too.
sure.
I always encourage people, if you're buying the leads, you also have to look at like, where are you placing the business?
Yeah.
Is it agency bill? Is it downloading? Like, what's the average premium on some of those leads? Because sometimes you organize that and you look at it metrically and you're like, oh, like, wah, wah, wah. And then we're chasing them for payment all the time, or they're lapsing and we're trying to rewrite them. And I just think that, and I'm not saying anything bad. I mean, we have a lot of agencies that do very well at these, but you have to have the right sales process. You have to know what to reject. You have to have a system. You can't just buy the leads and then let everybody go buckshot on them either.
I'm going to start counting how many times I say strategic plan on these conversations. But again, going back to that, it's, again, how it starts within your book of business is very telling how it's going to end up and if it's going to stay. And if you don't have a profitable book of business, at the end of the day, you don't have good account management. We talk about productivity levels all the time. That's also, not only are we overpaying people or do we have enough people on the team? It all comes back to revenue per employee, compensation per employee, and spread per employee. And for anyone not familiar with best practices, you're probably asking, I have no idea what she's talking about.
Go to the big eye.
Exactly. So go to the big guy, purchase that study. I promise it is the best. I think it's under $100.
Yeah. It's actually the 2024 is free online right now. I looked at it this morning.
Yeah. They post it. So
you can't download it, but you can read it online, which is kind of cool.
Absolutely.
But can we talk for a second? Because you mentioned producers a few times. We have a saying like, the only reason a producer exists is to write new business. And a lot of people have what we call producers, but they're really non-producing producers sitting on a book. And sometimes we have people that are well past retirement and they come in and they read the newspaper and they don't like log in the management. So they're not writing new business. And we keep paying them.
Yeah.
And you had mentioned something earlier too, that I wanted to kind of dive in on. Just because someone's compensation has been set, if you're not making money on it, you have to decide, do you want to give them your money?
Yeah.
So you're not profitable. They're not making you money. Maybe it was a mistake that you made hiring. There could be a million things that you feel guilty about. But in 2025, when you create your strategic plan, it is time to get serious and either say, I am going to shut up and give them 25 grand every year out of my own pocket and, write that down as a write-off, or I'm going to have a difficult conversation and good luck going and finding another agency that will pay them what you are.
Absolutely. I'm going to tell a quick story because I've definitely dealt with this. And it's not just, an older producer that maybe is just in their retired in place, we like to call it. It's also potentially that new producer that wasn't the right person for the role. You never profiled them. You never did any type of assessment. You just kind of got someone in the seat very quickly because they came at a nice rate and you assumed that they had the right experience. To your point, you are essentially giving your money away. And I remember when it's probably the first year of agency CFO, so I probably didn't have as much tact as I've learned over the couple of years with agency owners. I remember making a visual of all of the money that they are physically wasting. I made a little cash pile to show them how much money you are physically wasting.
Did you burn it?
I made a little slideshow for them and show them how much money they are losing out of their pocket, because at the end of the day, you are giving profitability away for every person who doesn't belong in that seat and for every role that doesn't want to be there. And when
they have a big lead in their pipeline.
They've been there 7 years. Well, they've only performed for 2 of them. So you
And that was even marginal.
We always hear the fear too of who's going to take care of that account though if they leave, and it's like, well, hire an AE or an AM.
Even if you lost
But
it,
it's
you'd
the
still make more
producer
money.
just to take
Yeah.
care of take care of that account.
Even if you'd lost it, you'd make more money. I think that it's so great what you guys do because it's that black and white. It's not, and for a lot of agency owners, they've never really had to hold people accountable, or they've wanted to, they don't know how. There's a fear that they're failing when a producer fails. And I said, well, if it's clear and you put them on a performance improvement plan and they don't adhere to it, they failed, not you.
Absolutely. Reagan posted something in the study this year, and I'm going to quote them. I don't know if it's originated from there, if this is just a famous saying, but they said, nothing good happens until somebody sells something.
Correct.
At the end of the day, there are two controllable metrics: how much new business we're writing and how much we're losing every year.
Yeah.
And those are the two starting and ending points to all other metrics. So we could do a deep dive to every single metric of your agency, but I can generally tell you, if you tell me how much new business you're writing and how much you are losing every year, I can probably already determine most of the factors of your book of business, of your profitability, and just your overall business approach. So
And I love the way you guys do it because it's not, I don't want to say it's not emotional because that's probably not fair 100%, but you're not looking at it from, oh my gosh, they've been here for 25 years, or their mom has cancer, or they just went through a divorce. You're looking at it from purely, is this making financial sense for you? And it's yes, or it's no, or it's we need to give it another 90 days and identify what we need to do. And I think so many agency owners operate so much on feeling or like that discomfort. My favorite ever is, but everybody knows them in town. If everybody knows them in town, then they know that they're not, why are they not sending their insurance to them? There's a reason. Like they know everybody in town and no one wants to send their insurance. There's a problem.
I am fully there. And, we'll go back. That's really the benefit, I think, of having an agency CFO is that you have someone that's not in the agency or a trusted partner that knows the inner workings of your agency. Don, our president, has always said and reminded me before I ever even started as a CFO is that the financials are the heart of business. If you know what's at the heart, you know the financial health of the agency, you know how all other parts of the body are moving. So at the end of the day, you've got to be able to have the financial health, and you have a partner who's outside of the agency. They don't know those stories. What we do have is industry contacts. We have best practice metrics. We have a financial background in exactly how insurance finances work. But we also have the mindset, that strategic mindset that's outside of the business. So we know the inner workings without actually being there and seeing it. And I think more often than not, it's easier to hold people accountable when we can come in, be the bad guys, and remind people that maybe your KPIs aren't actually leading to the result that you want. And hey, maybe you're staying up till 3 a.m. and, having these questions through your mind. Am I doing the right thing? Am I in the right business? How can I continue as an agency owner? Those are the questions that we try to answer so you can get some sleep and feel really good about the role that you're in. Because if you're not happy being in the seat of an agency owner, I can guarantee that's trickled down into your team and culture, and everyone knows it. So
Totally. And I want to say this, I think agency owners need to hear this. Like they work for you, so they have your financial back, right? Like there's a different role coming out to the staff and the people you pay. Like I once got told that employees are trying to do the least amount of work for the most amount of pay. Now, I don't think that that's everybody, right? But you have to look at it from sometimes some people in agencies are definitely trying to do that, right?
absolutely.
But agency CFO is looking at it from your financial health. They're not looking at it from the idea that, you're trying to be a nice person. And like, if you tell Kayla, like, hey, I'm going to keep paying this person, like, I can't fire them while they're going through chemo, like, Kayla's not going to be like, she's going to still tell you you're not making money on them. But you also have to realize that they have your best interest in mind, like your bank account. A lot of staff members are very passionate about what they do. They love the agency, but every day they're not thinking, is XYZ agency owner profitable?
Absolutely. And I will tell you, don't want to scare anyone. I'm not going to force you to make a decision. I'm not going to force you to fire someone. Do I love being right when those situations happen? Absolutely. It's why I do this. But I will say that, at the end of the day, we want you to feel safe. We want you to feel like someone has your back. And, if you tell me, hey, that's never going to happen, this person has to stay, we've got to work around the situation. I have someone actually with cancer. They don't, but a spouse does. And, we need to make their compensation work because it means a lot to the agency owner. So again, strategic plan, we go back and rewrite it because it's what matters to you. And the decision is yours at the end of the day. But I want you to know that for every decision you make, here's how many points of profit you are going to lose. And you have to be okay with that.
Well, and I want to say something on what you just said because life happens, right? And I think a lot of agencies operate like that retail, local, family kind of orientated, we all take care of each other mentality. But I also say that some of these personal events can go on for longer than you anticipate. So you think it's a small scenario and then it's longer and it's harder to readjust expectations the longer something goes on. Right. And that's why a lot of agencies feel like, well, I didn't do the right thing. I didn't give them sales training. I didn't do this. And they question themselves.
Mhm.
And so the way to reconcile that is just to say, hey, we're starting our strategic plan. Where are we at? Like if you need to take time off because your husband has cancer, do we need to move you to part-time? Do we need to change your role? Like we need to have you work a minimum of these hours. If you can't do it, we need to have another conversation because you need to backfill that role. The rest of your team is stressed sometimes
Really?
and pulling double. So as a CEO or an owner, I want you to think, I have to protect all the people on my team, not just one or two people. And
Yeah.
there's a great statement from Brene Brown, clarity is kind, right?
Yes.
So when things are not clear to the team, then everybody's operating on their own boundaries, which everybody has different ones. And you could tick off your rock star, and then everybody else starts slacking a little bit because they feel like they're undervalued. And at the end of the day, that strategic plan says, what do I want to be in 10 years? And if you know what you want to be, these decisions become, that statement, like it's just business. They're a business statement. Now, personally, you could go do a million things with your personal money for them if you wanted to, but it doesn't have to run through your agency or payroll.
Absolutely. And I will say, we've been focusing more on building a 3-year budget and making that part of the strategic plan. And I think why, a lot of our merge clients that we have, what's really nice is you've set a really nice vision for them, something to look forward to, but you also have to be able to fund that vision and make sure that your numbers stay. There's a lot of different operating systems out there, strategic plan systems. And I don't, we're pretty agnostic. I don't think there's one that's better than the other. But I will say, no matter what you use, if you've got a vision, make sure you have a financial plan to back it up. And that's why it's the number one place we start with. And I think that's another hot button item we've been working on is let's look past this next year.
Yeah.
Let's look past 2025. What does 26 or 27 look like? And sometimes, I actually just built one with a client up until like 2029, 2030, a few of them. And one of the biggest pieces that came out of this was, I'm going to be stuck with this person for another 6 years. I'm going to be in 2030 and still dealing with this person and still dealing with these profitability issues. And oh my gosh, we're not going to have enough cash flow as I assumed. And those are the pieces of a strategic plan and why you need someone who's operationally strong like EVP, and you need someone who can financially back it up. And I think that we understand each other's systems very well. So having someone and a partner that can work with others, I think that's really where the magic happens is when we can actually back up your strategic plan.
Well, yeah. And Kayla and Shauna will call up and be like, this person needs sales training. Or this person's retention's not good. We need to fix it. And it's nice to know out there that you don't have to do it alone, right? Like the finances are now my strong suit because like, hey, I want to go love people. I want to go help them at their potential. So when I look at like the finances, it's taken me a long time to understand them and get them, but to connect the dots of the way I can love people is by being strong and healthy for the long haul, right?
Yeah.
I want to go back to the compensation piece because this is one that's just, you see like, it's like a peacock. You see underpaid, overpaid. Well, in this market, I've been in some markets where you can pay people $13 an hour. And like, cause it's a very small not economically growing town and an average home costs $80,000. And I'm like, well, out in Rhode Island where I live, an average starter home is $425, right?
Yeah.
Like
Not the
move me
same
out
price
there
point.
for retirement, right? Like my dollar goes 700 times farther. But the compensation piece, I think, is so interesting because so many agencies hire out of desperation, not preparation.
Absolutely.
I mean, some of the things I've heard people pay people, I'm like, I'll work for you. Like, I will shut it down and I will be done at 5 every day and I will crush it for you.
Yeah.
I've considered being a producer 1 or 2 times based on their comp plans.
And I'm like, okay, so you give them leads. They don't have to go find them. Like, and their base salary and 100% better. And I'm doing the math and I'm like, I would crush it for you. And I do think that then we also deal a lot in agencies unequal pay against people, right? So some people are underpaid, some people are overpaid based on experience because some people, like an annual review process isn't always in place. And not every account manager is good at advocating for themselves to say, hey, it's been 6 years. They're like waiting for you to do that. And a lot of agencies miss the mark, I think, on reviews and compensation in general. Again, on both spectrums, too high, like Goldilocks, too hot, too low, too medium, all over the place. Like I can't figure out people's compensation strategies sometimes.
No, and I don't think they know it either, which is probably where the problem starts, right?
It's like, what do you need?
I will say, Reagan does a really great job of reading across the country, all of those markets. They're not catering to one or the other. So if you are looking for exact numbers and salary ranges, they do post that on the study, I think later on in the pages, but towards the end. But that is definitely a place to start with, just to see where your compensation steps up for each role of the agents. But a good rule of thumb and what, the great equalizer for account managers is it all comes back to the book of business. Similar to how I said, new business and retention, those are the 2 starting and ending points. Same thing for our compensation plans. We are paying account managers to manage said book of business. At the end of the day, no matter how your job description lies it out, no matter what their key responsibilities are, their responsibility is retention and retaining that total book. Therefore, we pay compensation. Yeah. And we can, at the end of the day, I'm going to give them the benefit of the doubt, even if it's just managing that book. That's the one number and starting point we can start with. So a good rule of thumb that we like to use, I will give some numbers as a CFO, is that, if you're looking at the total book of business that they are, servicing for personal lines, you should be somewhat close to about 15% total comp. So that includes base salary, commissions, bonuses, not benefits and all the other comp factors, but just straight compensation. It should be 15% of that total book. Let's say if you've got a commercial lines and a personal lines, they're just a, PNC blended account manager, that should be running somewhat close to about 19%. And if it's just straight commercial lines, you can pay somewhere close to about 19 to 21, depending on how generous that you want to be and how big that service book is, because we all know that small commercial and large commercial drive very different revenue points. So I always say use your best judgment. It is very natural to overpay and be very rich in compensation. But if you do the math and you realize that, on average, all of your account managers are making 35% of the total book, that's very rich. And maybe there's some work that we can do to really get that right size.
And they should all come in with a big old smile and say, whatever you need.
And that's not to make anyone feel bad. It's not telling someone you're horrible at your job or, at the end of the day, that's a best practice metric because it's been proven to work. And when I look at it, a lot of agency owners, I give them that number, I do the math for them and that, it's a very rich plan. And they say, what now? Well, what's nice is we can always grow our way out of that problem. So it's just making sure that our growth strategy, again, your strategic plan, is making sure that it makes up the difference and it right sizes that book of business. So we're paying up to 35, let's right size that and make sure our new business and new business plan backs up right sizing compensation.
And as you're talking about the growth on their books, I kind of want to go back to Kelly's point on the review process of the review. I think if you are overpaying for these positions, that's okay. But I would definitely go through what are your expectations for that role and are they hitting those expectations, and start implementing mid-year performance reviews, annual performance reviews to make sure that you're pushing and holding these people accountable to that pay that you're already overpaying on. Because most agencies that we're seeing, I mean, best practices is like 50 to 52% of total comp should be towards all compensation, or total revenue should be towards compensation. And most agencies are, 5 to 10 points higher than that. So everyone's overpaying basically.
Absolutely.
And so that's okay. Like pretty much that's what everyone's doing. That's okay. But let's make sure that those employees are holding up their end of the deal and getting to those expectations that you want, so that your agency can grow its way out of it, and that you don't end up growing and then hearing people saying, well, I can't handle, the extra workload. Make sure that it's clear too. I think transparency is key in that. Helping all of your employees, your total agency understand, hey, here's where we're sitting, here's where we want to get to, and this is why, so they can understand, okay, as we're growing, I'm not going to be getting another teammate, another this. I need to understand that my role is going to be growing as well, just to kind of meet up with demand.
Yeah, absolutely. And I would say this, I think if you go to the team and say, hey, we need to grow, my personal opinion is many account managers don't know what to do. Okay. Like they know how to change a vehicle, they know how to quote, they know how to do this. But when you ask them, because they don't know these numbers either, right? Like they assume how hard they work is what they should get compensated. And so because maybe you haven't shared the retention number, you haven't shared your new business number, like there is a lot of people who don't want to share some of these operational metrics, or they don't trust them. They don't know how to run them. I also think you have to sit down and say, okay, in order for us to do this, we are going to start making renewal review calls, or we are going to start tracking the closing ratio. We're going to make new business a priority. As the leader, you have to tell them, here's the target and here's what we are going to do. You can't expect them to just go on their own and just say, okay, what do I do tomorrow when the phone's ringing off the hook? What changes should I have to make? And you also don't want 10 account managers doing 10 different things either. Like your processes, your procedures, these are the things that you need to focus on. So when Kayla or Shauna tells you this number, you can't just walk into the boardroom and be like, guys, we're overpaying you and we need to grow. We're not hiring anybody else. Like, okay, great. Everyone's like, and on Indeed today. Like, that's not motivational. And also, they didn't cause it. You did. Okay. Now, maybe you didn't have the tools and you weren't educated, but we're also talking about them not having the tools or being educated. So the idea is that when you know better, you can do better. So everybody needs to identify that. You also have to then, once you know, educate, but then tell them what we're going to do to fix it, because account managers want to follow a plan. They're not the person who's going to come up and solve the problem, nor do they have the tools most of the time to solve the problem.
Absolutely. I like to remind agency owners, they're at the end of the day, there's a reason you hired them for a service account manager, not for a sales. That is not their predominant nature. There's a reason they're not in that seat. So that's not to say rounding out, and again, going back to that unmined book of business isn't a smart tactic to grow. That's absolutely within their wheelhouse. But to your point, you've got to lay that out. Because at the end of the day, if they focus, there is only 40 hours generally in a work week. If, 80% of that they're servicing and maybe 20% on sales, or however you want to break it down, they're going to always take away from that book. So let's be really clear. If you're going to give them 10% of their work week to hit those sales metrics, be very clear on where you want it coming from, how much, and to your point, that transparency is
And then
key.
give them the tools, right? Like they don't know, like we like to say people in personal line service and sell, they like, email someone the quote. I'm like, great, like what a waste of your time. Like they don't know because they've only either learned from you or another two agencies, and they don't know, and you might not know, and that's okay, right? Like we're not supposed to know everything about everything. Your agency might be really amazing at like commercial production, but in personal lines, it's the redheaded stepchild, or you're really great at personal lines and your E&S renewals on commercial lines are a disaster, having E&O issues left and right that you're putting out fires. Like this is where that planning comes into place. It gives you time to step back,
Mm-hmm.
analyze, and not just think about how you feel, but like, let's pull the numbers. We have a survey that we want your team to take. Like, let's look at things holistically so that you're making educated decisions and not just kind of running wild on it. So as we kind of conclude here, we have a couple more minutes, but how does an fractional agency CFO work, right? So we got a lot of questions like, well, what would a virtual assistant do? And I'm like, everything. But like, I'm sitting here and I'm like, oh my gosh, I don't know any of these things. And I'm now feeling like a complete utter agency owner failure. First of all, you're not a failure. You're here, right?
Wow.
So that's the first step. You are here. I took like 2 finance courses in college, and that was 22 years ago. so, so the fact that you're here shows that you're learning. But tell us a little bit about like how it works, so people
Yeah,
can kind of just get their head around what this might look like in
absolutely.
because we might have scared them a little bit.
I always like to start with, everyone always asks me, what are the reasons people reach out to you? What's the reason for choosing a CFO? And the answer is not always that things are messy. It doesn't mean that your numbers have to be horrible. It doesn't mean they have to be perfect. There are so many different scenarios that we see every time, and you could have the best numbers in the world and still need an agency CFO. Because again, it comes to scaling, growing, and making sure that whatever you did for, to get you to that point, you're switching it up and you're getting to the next point.
Can I
That's
just say
hopefully
one
not
quick
as much
thing?
work.
Well, I want to say one quick thing because a big part of the workbook that we have is as a business owner, you are not a slave to your business. What do you want? Do you want a second
Exactly.
home? Do you not want to work on Fridays? Are you bored with having your own accounts and you need to have an account executive that's taking that off your plate? Is your agency too big where you need to hire an operations manager? Because like there's a lot of agency owners that are very stressed, and I
Yeah,
call that they're operating the 911 line. Like they're just putting out fires all the time because they're not working in their kill zone. They're working in their drudgery zone of nobody else can do this. And you might feel like you don't have the money, but you might find out by working with Kayla and Shauna that you do have money to get the bookkeeping off of
yeah,
your belt, or that you find out that holy macaroni, my book size is half the book and I'm servicing it too because nobody else wants to. I don't trust people in my agency. I just think what Kayla is saying here is so critical. Is part of what they're going to do is find out what do you want financially, because I think that
exactly.
that's a huge piece we don't talk enough about of maybe you want your spouse to not work. Maybe you want to get multiple streams of income and this is how you're going to do it. If you don't have a clear vision of what you want financially, then your agency is always going to kind of follow suit. If that's something that you also believe.
Absolutely. And that's why I'm going to say that no matter what package program you go with, the products that you're interested in, the starting point is always that one-on-one conversation. We really get to know if it's a partnership that would be beneficial on both sides. We get to know what it is that you want. Is it in your personal life? Is it in your agency? You would be surprised how often those are intertwined and
Mm.
going back to making you feel safe. The whole point is so that you feel like you can share those things, and that at the end of the day, if you don't share what your value factor is, we can't bring value to you. So that starts our first conversation. From there, we have a couple programs and packages that range off of revenue size. So it's not to say there's one that's better just because you're a larger agency. All of the fundamentals are the same. It's really the strategic side, going back to those comp plans. You might not have a COO. Yeah, there's different complexity levels, and we've really fine-tuned. The other piece I'll say, I'll give a little tidbit. I don't know when this is going to get released, but if we have seen you at Applied Net this year,
It will be after that.
or
So
it's
yes.
yes. So we hopefully should have seen you there. We're actually releasing kind of a new product. It's called the Intelligence Suite. And the main points we've heard is, I want the numbers, I want the dashboards, I want all the indicators, but I really don't want to talk to you month to month. Love the strategic side as problems come up. I would love to buy time with you, but it's just not something they need monthly and that monthly conversation. So we are rolling out a different program where you can get those numbers. I always say if you're an agency over 2 million, you're probably ready. Complex enough, I'll say, for some of our larger packages where we're a little bit more involved and more in depth. It involves call time, it involves seeing your numbers. You get a really clean, great report again for yourself or to share with your team. We work together in that sense. We have a mastery program where you can actually work with Shauna, ourselves, any CFO on the team, any member. We bring in people all the time. You get a true CFO dedicated to your agency. The other piece of that is I know some agencies are not 2 million that are, using this workbook. They want to get to that point potentially. While we don't frequently advertise it because we only run it one time a year at the beginning of the year, it's called Financial Fluency. I actually run the program myself. I get so much joy out of it. I generally have about 5 to 15, I'll say, agencies that work together as a cohort. We give you all of the fundamentals. I teach you the acumen. So fun words like EBITDA and P&L and general ledger. We teach you what all of those items mean, what they mean for your agency as an agency owner, right? I don't expect you to be the finance seat forever. I will really teach you how to fish, give you all the right tools so that you can then get to 2 million without needing that CFO every day, yet still using those financial levers and metrics to measure whether or not you're on the right track strategically. So that's really kind of encompassing. We try to really cater to most revenue sizes and again, how much CFO involvement that you want.
Yeah.
At the end of the day, you have key financial reports. The accuracy of them is the most important, and obviously the interpretation of those results. Not everything is black and white in finance. There is some interpretation, and that's really where we, try to be your partner and make sure that you understand your numbers and you're getting the best interpretation of it.
I think it's great. And I just want to leave you guys with this because you have to wrap up. I know I've got to hop on another meeting, but I also want everybody to think like your agency is an asset and you want to sell it at a high note, right? So you can't do that in 30 days. Like you can't be like, I don't want to do this anymore and I'm going to sell it. Like it is a look back period. And I just want to reinforce again, sometimes people think, well, like I'm good. I make enough money. I'm fine. That's not what we're talking about here. You can make enough money and then choose to reinvest to get a producer. But that should happen after you have the money, not before you have the money, because you've met somebody that you think they're going to be great. You're operating very emotionally and you're going to look at them and what you pay them and you're going to like start having resentment to them. Like I paid you X and you're not producing. Where if you have that money and you say like, hey, you have a year to ramp up, you can have those indicators, but it's your choice because you have the money in the bank, not burning it before you have it. And then you don't know what those indicators are to make sure it's on track. So this was awesome, guys. I'm sorry I have to run, but
That's okay.
I'm inspired. I want to go back and look at my financials tonight and see where I am. But thank you all. We'll put in here how to contact these ladies, but definitely something I think every agency should at least investigate, because if you're not making money or you're burning money, you don't know what the other stressors that's putting on you and your team as well. It's like Kayla said, like that's one, but there's probably 5 or other things that's depressing in your agency. So thank you all. You all are awesome. I appreciate you so much. Thanks, guys.
Thank you so much.